Hi, it's David here with Futures Trading. I want to make sure that I say thank you to you guys who are taking the time to view the material and leaving the likes and even the comments. Thank you so much for the comments, my friends. I appreciate you, Dimitri, Santiago, George. Thank you so much for coming on board and liking. And Zoe, thank you for coming on board, my friend. Dimitri, I got your email this morning. I didn't get it yesterday. I was kind of tired of it, but I got it this morning. I want to make this video for you. But thank you so much for the kind words, you guys. I really appreciate that. That price action method, yes, and I made sure I responded back to you. It does take a little bit of time, but you will definitely get it. And Santiago, the turning points, the turning points. We're going to take a look at some of that via two other markets. So we're going to look at that information via the two other markets. So we're not going to just look at the NQ today. We're going to look at something else. But thank you so much for taking the time to share your thoughts, letting people know this is a safe place to learn and that the information is useful. I really appreciate you doing that. So let's get into it. So here's GC. And we're going to just kind of pick apart some of that information. And Dimitri, we're going to definitely touch on the two trends. So when you have dual trends on the board, what to do. We're going to talk about that. Let me just kind of breeze through the charts real quick, and then we're going to dive right into that dual trend and how to approach it. Now, this is a trend. Clearly, they're not going to run straight away to this trend distance, and you will probably see them come back down a little bit. Now, 55 is the target. You want to go with the clusters, which is the 15. Let's go the 15 down to the 05 and 25 down to 15. You want to go with the clusters, or let's say 95 down to 85, 85 down to 75. You want to go to the from the clusters up to the 55, or from here you would go 85 to 95, and then 95 to 05, and then 15 to 25, 25 to 35. And so one tick outside of each zone exclusively. So they hit zone one tick outside of it, zone two, one tick outside of that. All right. Now, they overshot this zone. They supposed to go to this one, but I just wanted to put this here because I believe that and I actually put this here yesterday. I believe that they'll go ahead and pull back a bit. So they're hitting this first zone. The stop would be one tick outside of the first zone for the drop, and already you would have been net positive if you didn't try to pick it up from up here, okay? Because they overshot the zone. They could have very much climbed up here. Now, this bar may not hold them unless they plan on wicking out real crazy today. They tried to do the no close here for the last couple days, but you can see they're coming under that no close bar, and that's the hard stop. Now, unless they plan on wicking this out and going straight away, they still may stop when they get right about here and lean back over. But you go from the clusters, all right. You go from the clusters down to the target level, which is kind of the midpoint between all of it. Okay, so you're kind of going from each extreme back to that midpoint of that 55, and that's how that works. Now the 55 is up here, so it would go 55 to 65 if they're going to try to pull it back down. I don't know if they'll get past here. I don't know. We'll see. But you definitely. Now I will say this: don't want them back beneath here at all. Don't want them back beneath here at all. So you have two bars back here that's green, and this level. You don't really want them in here. Now they can come in here, kick that stop. They can, and then build another setup for you to get it back up. They can. Hopefully they'll just drift right in here. Here's a no close bar. Hopefully not even break this and then turn around and take off again if they plan on staying up. That's the key. The problem right now though is that they're at the center of the chart. Here's the second bar that will be down if they end negative today. That's the second bar, and there's enough room to put five more. So you don't want them back beneath here. All right, just want to tell you that. The ES, it never gave you an uptrend. I tried to frame this out a little bit, and so it never gave you an uptrend. All right, so that's only six bars. One, two, three, four, five, and there's six. It never gave you an uptrend. So if you're trading the ES and you're not doing market correlation, because I don't, if you're trading the ES, you never would have went up. So even if it popped up here, you would have been looking for the center of that trend and then look for the next move down. Same thing here. There's no uptrend. You're expecting it to drop again. There's your no close bar here. They pulled up on it, but now it didn't even get to the back of it, and it turned around, and there's your next move down. Now I kind of framed out some intraday levels inside of the higher time frame zones here. So the higher time frame zone would go 250 down to that 150. Now remember, these are clusters. 150 down to 050. All right, so these are the clusters to get it back up should it want to go up. And so if it plans to go up, they may end up back at the 550 up here. If they blow through these clusters, that's just absolutely horrible. And they're going to have to go to the next clusters, which is down at 950, and you get it. All right. But on the move down here, like let's say if they're going to go down, there's a pivot. They didn't want to give two closes. They went through it yesterday and they didn't give the close. I put some intraday levels in here, kind of the same thing. There's the 85 up to the 95 and 95 up to the 05. And then here's another cluster here at 15 up to 25 and then 25 up to 35 to play this zone. Now you would go for the sell side zone, you would go 250 up to 350. All right. So if they want to play the sell side zone, they shouldn't get back outside of the 350 here. They shouldn't. You got a no close bar here. This the hard stop bar. You don't want them outside the zone, so they may not get past here if they plan to go down. All right, now this is a no close bar from yesterday because it again the mid is below the low of this little bar from Sunday, Sunday's trading, or and so the stop will be here. I do suspect that they can get past here. They may not, of course, close above this bar here if they plan to go down some more. Now, for the intraday on yesterday, if you would have played this zone here from the 250 down to the 150, that intraday level would be 15.00. So we're taking a number off, and that's down to the oh 05. All right. So 15 down to oh 05. The 25, they went through it. So it was 25.00 down to the 15, but they went through it. So you would go one tick outside of the oh 05. And so you would have picked up yesterday's activity. All right. So that's the ES. I do suspect that if they're going to turn, they're going to have to hurry up and get to it because here's the center of the scale. They broke this, and that's not okay. They're almost at that trend distance. You can just go ahead and count it and say they made it. If they plan on going up, they're going to need to hop to it, and I mean get to it with some serious activity and let's go, because they're at the center of this scale. So that can be a problem if they don't want to do that. Yeah, they're coming right through here. They'll wind up somewhere down in here. Absolutely, ain't no question about that. All right, so let's look at that in Q now. The last time we did the video, price was here. Price was here. Okay, on this bar, it hadn't finished yet. It was just here, and they were heading down. I told you if they're going to go back up, they need to hurry up and get back to it tomorrow. And well, as you can see, we flipped the zones upside down. I told you that if they're going to continue down, they would come right up into here and then go down. I thought they would stall it a little bit and then kind of go down, but no, they shot straight up there, didn't quite hit the zone, and then just took off and blew the bottom. I've been telling you guys for the last, I don't know, at least 3 or 4 videos that I don't like what was down here, and I wouldn't trust it. They took out the middle of the turn, and there's some other things I know clearly. But I told you they can come back, just like I told you they would get through here, and they did it. There's some stuff that's supposed to be on the turns to keep it up. There's some stuff that's supposed to be on these turns to keep it up, and that's not here. So it kind of made sense that they came back. Now I did tell you, could they keep going? Sure, they absolutely could. I just don't like what was down here, and I said that. So they gave you a trend twice on the NQ, but it just didn't hold. But remember, the ES never did that. So if you're into market correlation, you could have looked at it that way. I don't do that. To me, that just doesn't make sense to do so. So I just trade what's right in front of me. Now, these zones here, we don't need them. All right. We don't need them. I'm gonna just move this one up. Let's go. Let's go. You know what? Let's not do that because they may want to be difficult and lift up a little higher and then fall. Let's see if they'll do that. Let's leave this here. There's that level, and I told you that they will lift before they got here. I did tell you that. I just didn't think they would want to do this. I didn't think they'll want to do this, but they did. So now that they're here, remember 55 is your target. Okay, this is your target. You're still above the center of this scale. Now, hopefully they'll just again get back to it. And I told you you'll need them back above here to get this 55. This is a target here. Okay. And so 55 is up here to 65. Hopefully they won't even hit these clusters and they'll just go right back up. I'm gonna be honest, they're in a downtrend. It can keep going. It can keep going, people. I want to have you know that it can. So, but yesterday, yes, you could have absolutely picked this up. You could have picked it up yesterday if you wanted to. All right. So wanted to touch on that. All right, now let's get into the question that you emailed me, Dimitri. I want to go ahead and talk about that. The turning points, Santiago, is exactly the statics. You're going to want to go with the statics if you're not using the range. Let me say this. If you want the range, anyone that want the range, the chart scale, all you have to do is email me. And if you don't mind, just say thank you when I send it to you. That's all. I just want to, make sure that we I guess, implement the right etiquette. When someone give you something or do something for you, say thank you. I really love when that happens, because then you show a level of respect for one another. So, but yes, if you want the chart scale, you want the range, email me. I'll send you the chart scale with the ranges on it. That'll help with the turning points. That'll help with the turning points. That'll do it for you. Uh, the the um, the statics, you're going to have to kind of visually do that, kind of like what I'm doing here, just drawing up the chart. You're going to have to go ahead and just do that, because I don't have an indicator that'll do that. So, but yes, 55 would be a turning point also, potentially, but it's mostly a target. Your turning points will be the clusters. So you're really trying to get turning points away from, the 25 to 15, to 85 to 95. You're trying to get the market to turn away from those levels to get back to the means in the middle with that 55. All right. So you want to try to keep that in mind, but they're still down. They're still down. But let's see what they can do for the next 2 days. I'm gonna give you a couple targets here. Let's go. 309. Let's see, can they get there? 309 and a quarter. If not, they're going to fall to that 169.75. Okay. And I know this stuff is a little ways off, so I'll keep you posted as to what they're doing. All right. But this is where they're at currently. So let me just kind of put a little marker here so I can reference this on the next video. All right. So let me just kind of throw that right there right now while I'm thinking about it. All right. So again, here's the targets. You can pause the video. 309 or back down to that 169. All right. So now let's talk about, Dimitri. You had asked me about the dual trends when you have two trends on the board. We're going to talk about that right now, my friend. 148, you said 148 yesterday. 148 yesterday. All right, so that's this bar here. So that's this bar here. That was the trend bar. Now I left the chart as is because I know you said you didn't install the NinjaTrader yet and upload the indicator that you had purchased. So I want to leave the chart just like you have yours. And, I'm thinking that, you may not, of course, have any indicators, or you may have indicators on it. It doesn't even matter, but you don't have the bar coloring and the levels. So I don't want to put bar coloring and levels on the chart if you don't have that. I want to address it just the way you would be seeing it without that information before you download the platform. Now, once you download the platform, you'll have the indicator on your chart just like me. And for those that want the indicator, if you email and want the chart scale and want the ranges, just make me aware that you're interested in the indicator, and we can discuss how to obtain the indicator as well. I, let you know what you have to do in order to get the indicator. And I'll leave a description below of all the stuff that kind of comes with that indicator. All right. So this is the 148 bar. 148 bar, it's a trend. And so off the trend, now I kind of did the example for the down because you had a down up here too. But off the trend bar, typically they can run straight away to the trend distance. It will also depend on how much distance you got. That's another thing too. Just kind of throw a little more information at you. If the distance is kind of big, they may do a little bit of cycling before they get there. That's all. And so there's really only two entries to take. It's this entry here, which is a pretty good one. I mean, this bar didn't come back at all. It just started moving away. So that mid was above this high. Take it. There's the hard stop. You would have got stopped out. And so to give you an idea of what that looks like, you would have got in, let's be generous. Let's say you would have got in with something like this on it. Let's say something to this nature. All right. You would have lost that. They would have got you. Okay, not a problem. Now it's not a problem because what you'll lose, you will get back. That's the whole purpose of me showing you this information. You'll get it back. So you would have lost that. All right, that's your loss parameter off of just trying to get straight there. Your second attempt would have been off the center here. Now you had this is close without the bar color. I'm gonna just eyeball it and say this probably would have been it. That would have been a no close bar right there. So hard stop here. On their way here, you could have tried to put your stop right under that bar to play it, and then you would have lost. Let's say you would have lost, this bar. So now you collectively would have lost this much. All right. So let's just kind of do this here. So you would have lost, let's say about that much altogether collectively. Now, again, timing yourself into it, that's you got to use different techniques in order to time yourself into it, how to get into it and get it to work without, having drawdown that's significant. There's timing techniques, and this is the part where you get professionals to really help you with, because I can tell you how to get a trend, I can tell you a bar pattern that will prove participation. Now, remember, let's put this up here again. I want to make sure that you understand what it is that I'm trying to put in front of you. Number three, which bar will prove real participation for a hard stop? That's really important. And we're going to talk about what that is. So, when it comes to timing the market, there's various different ways you can time it. But my goal is to give you something that's holistic that can get you real participation. You need to know where the money is really at and where you can get it to work. Now, you would have lost this much. You would have lost this much. And unfortunately, they would have been making a trend back into the center of your trend. Now let's take a look at that daily on that NQ. Let's go look at that. All right. So remember, when they come to that center of that trend and they're starting to close beneath that, that is an absolute problem. Here's the center of the trend up here. They didn't close, above it, and they kind of turned around, closed beneath it, and then took out your turn. Kind of the same thing here, closed beneath that, and then they took out the turn. All right. So now when they get here and they're closing beneath the center of your trend, now I know they closed above the center of this one up here. I totally get it. Well, here's the thing, and I say it all the time, it cannot be both. Take out this trend or take out this one. It cannot be both. Cannot be both. And I know you mentioned higher time frames, and I addressed this in another video, but you may not have gotten that far to watch that video. But does top down analysis really work? That's the title of that video. But I'm gonna say it here so you don't even have to go back and watch that. I do not believe in top down analysis. Please do not unsubscribe. Don't hit the dislike button. Don't leave me negative comments on this, people. I just don't believe that. All right. I just don't. You're more than welcome to hit the dislike and leave a comment if you would like. I just don't. I don't do that. I don't. And I don't want you to do that, honestly, because I'm going to explain to you why. Every monthly, weekly, daily, hourly, 15-minute, whatever, 5-minute, whatever is bigger than the time frame that you're taking entries off of, whenever those charts turn, now I just want you to think about this. The price that they're turning from, because every turn in the market starts with one price. That's happening on a tick chart. It's happening on a one tick chart. And so it's a lot more difficult to be able to time a specific price level on a tick chart to know that you're about to catch the massive turn on a weekly or a monthly chart, or on a 1 minute. You might now you might can you actually might can do it on a 1 minute. I'm gonna be honest. You can probably pluck a tick chart off for a 1 minute. I've done it several times over. Now, but larger time frames, and this is why people promote that type of information of saying, hey, go with your higher time frame top down analysis. This is why they do this, is because it's a hope factor there. That they're hoping that it will work, because again, it's a larger time frame, so they're thinking that the larger participants are going to step in and help that market turn for you when you place your trade out there. Don't do that. Don't do that. Don't believe that. That's not exactly how markets work. Remember, if it's going to turn on a tick chart, that one price that turns that weekly around, that daily around, that hourly around, you're going to see it show up in your 1 minute first. So try not to do that. I just want to tell you that's why I don't believe that. Lost so much money over the years trying to believe that, hey, because we've been in this direction so long, it's destined to work. That is not how it works. It's not. So just a little food for thought there if you want to consider looking at higher time frames. I look at them too. I just put into context what needs to happen. That's all. And so while I'm trading my 1 minute for my entries, you know, I've traded smaller time frame, 15 seconds. I can get on smaller time frames. You just get out faster. That's all. And so I will not ignore what the time frame I'm taking my entry off of. I'm not going to ignore what it's telling me. That's the main purpose of me saying this. Don't ignore what the time frame you're trading is telling you, and start going into a higher time frame, and just willing to just say, hey, I'm just going to get in this and keep widening my stop, or keep taking fading trades. I'm gonna keep stepping in front of it and just trying to get it to go the other way. It's not going to happen. Please listen to the trend. All right. So the move here, they would have got you. So you can't believe in this uptrend. Now, in my opinion, this is two wonderful setups. This bar here and this bar here, two wonderful setups for it to go. And I believe I stated it before. You don't want them passing these setups. Not too many of them. One or two of them is fine. It now depends on what the one or two look like. But I don't think they should have got past these two right here. Mainly because I want to see them do this. Okay, what they've been doing here, I want to see them do that and take back off. And they went a little bit further than these two, but it didn't want to get right back up and go. You're at the center of the trend. It cannot be both. I always say that it cannot be both. It cannot be both. I can't stress that to you enough. It cannot be. It cannot be both. It has to be one or the other. And so, with them failing here, making a trend back down on top of you. Okay, they made another trend back on top of you, reiterating this information over here. This may not work. They close beneath the center of that trend. There's a chance that they'll take this out. They lift it up, went to the center of this trend now, and they turned back around. Now, I want you to just take a look at this bar pattern here. Is that mid below that low? Okay. We had another one here. This mid is below that low, and we had one here. This mid is below that low. So they're building momentum back into this turn. Okay, that's a problem. So it's possible. Now look where they turned at. Look at that momentum. All right. This is where you again the hard stop participation where you can hide your stop. Okay, so they have no business knocking out your stop for the participation. All right, it's all about that participation. They turn around. They tried to give you the participation back in this direction with this move here. Okay, they tried. Now this is from the back of this turn. Okay, and you had a little bit of it right here. Okay, but then they got to the center of the trend and then they started it all over again. So hard participation coming back in on both of these bars, actually. Okay, that one and that one, they're up there. They're coming to get you. And that's the problem. So some more participation here right before they blew that low. So there's only two ways to enter this information here, and that's off the trend bar, which is here, or near the center of the trend. Because most of the time the reversion will happen and then they'll take back off. So let's take a look at none of this had taken place. Okay, we don't know this is going to turn into an uptrend. So that's why I got this diagram over here. Let's take a look at this information off the trend bar. Off the trend bar, it came in here for that move. All right, came in here. Now, if I told you, the reversion typically happens sometimes once they set the trend. You can go back and look at the videos; it'll tell you that. So I'm not really interested in taking this one. I'm gonna be honest with you. Now they could have ran straight away to that target. They absolutely could have, but I'm not really interested in that. And that's not really what I want. And again, now you could have got in. You could have. Now you could have. Now I'm one that once they make the trend, I actually want them to lift up. I do. That's just me. Now you can run straight away with them. That's the setup here, and you would have gave you some of that money, some of it. But I know with all of this over here, people are going to try to pick this up. All right, they're going to try to pick this up. They will. Now, they would have made the trend distance before they got here, so I probably would have missed out. But I know right in this area, there's a good chance they'll try to pick it up. I mean, given this acceleration up, there's somebody down here willing to try to pick this up. And so here's that vicious pop up. Now, this is a no close bar. This is a hard stop. Now, I'm more inclined to take it from right here on this pop up. More inclined to do that. No close back above this level. Hard stop here. Take the drive down. Now, I want you to look in any of this right here, and it's no pattern. Okay, no pattern in any of this. They come up right here. They tried to drive down. Let me do this one more time. That pattern is not there right in here, and they're on the what fifth bar? Yeah, they're on the fifth bar coming back up. What's going to stop them from doing the other two? And so, if you tried to grab the, I'm gonna tell you right now. I'm gonna tell you right now, they're too close to this for me to try to grab that. There's a chance that they will lift up. But let's just given that we jump in off that trend bar, we see that mid beneath that low hard stop there. Let's try to take the ride. They would have gave you something. They would have. First, they would have offered you some of it. Came back, scared you real good. Came down, went just a little bit lower. Didn't give you the two closes beneath that pivot. They're coming up higher. But when they come up here and they're not giving you the real participation to go back down, they're not giving you that. Don't do nothing. Okay, so when they go with the up, if they're knocking out your real participation, coming back down past the center of your trend, bringing real participation back into it, they're going to blow that bottom. So when you see two trends on the board, my point number one is this: they can only do one trend, because remember, it's associated with time. Is associated with time, and I told you the definition of it. It's you knowing that the past will inevitably be the future once they create that present. So what they're doing with the presently, what they're doing, they're trying to deter you from understanding that what they just did will inevitably present itself again. It's going to show itself again. So when they did this, okay, this is a trend. This becomes the present, and they didn't make the future yet, because the future is down here. So this is presently what they're doing. Then they made a trend back this way. This is again the past. Now they made a trend, because the trend is always your past. This is presently happening. Now, what about my future? Okay, what about the future part of it? Okay, because past, and they can say all they want, past results is not indicative of future result, whatever. I want you to know that some of this stuff, they're telling you this stuff because they don't want you to understand the simplicity of trading. I want to make sure that you understand it from a very linear, simple perspective. Very simple. When you were born, you can't go in reverse. You were born as a toddler, you became a preteen, then boom, you became an adult, and you cannot go backwards. Trends work the same way. When they made this tick and turned that market, if it's going to go down like way down here, they're not going to erase the past. They're not. And if it's going to go through this high, they're not going to erase the past. They're not. So you have to look at the chart very linear, all right, and definitely understand it from a chronological significance. Take away this trend. Take it away. If not, I'm going to lose this much. I'm going to lose this much, okay? And then I'm going to get this. This is bigger, okay, but let's just do this. Give or take. This is far bigger than what you would lose twice if you just take just one, take this one and possibly this one. Don't take a lot of trades. Remember, there's only two entries, from here or here. Well, two locations. Now, you can take as many entries near these locations, but you need the real participation. That's important. And so you see the participation mounting, take the shorts. Okay. Don't fade this. Now, I'm gonna tell you, don't fade this. You don't have to do that. You don't have to fade it unless you want to. Don't fade this. Just let it turn itself back around. Get back beneath the center of your trend, show some real participation after doing so, and let them come up and test it. Now, you think about it. If they came back to the center of your trend, okay, let's do this. If they came back to the center of this trend after closing beneath the midpoint, there's your real participation bar right here. There's the center of your trend. This is a no close bar. Okay, this is a no close bar. They never closed over it. Take the ride. Okay, because on the way back down, if they're going to honor this pass to create that future, they're going to give you a reference point. I can assure you, they're going to give you a reference point. That's why you don't have to take a lot of trades. Get that reference point for the real participation. No close bar, hard stop here. Give it one shot. The only next one you had was these two up here. Take the ride. And then after that, there's no uptrend. No uptrend in any of this. There's no uptrend. Take the ride. Now, it's going to respond. You know why? Because of what's happening over here. Take these guys out. That's all. And take these stops from the people that don't know how to trade. Take their stops too. Take it from them, because they don't know how to trade the chart. They don't get it. And so, in a very simple way of looking at dual trends, first and foremost, you have to say to yourself, it can only be one. It will never be both. The past is attached to the future movement. It's attached to it. So it's indicative of what's going to happen. You have to believe that. And so I want to let you know, take the location from the center or either off the trend bar and leave the rest of it alone and look for your real participation. Because if you're going to win, and I said this, if you're going to win, it's going to be this. It's going to show up. I don't care what other kind of strategies are out there, whatever people are saying about indicators. I can assure you, if price is going to get from point A to point B, this will be in it. This will be in it. This price pattern will be in it. I guarantee you. Now, there's other price patterns I know that can get you in all of this stuff. But for the foundation of the channel and what I'm promoting to the public, I want you to know, just go with this. This is the hardest stop placement you'll ever find to get the participation to keep you in that trade and let you win. All right. So I hope I answered your question again from that 148 bar. And on the way up, if you want to look at that, I think you had a trend here. You didn't have a trend here. So you only had one trend here that they knocked out. Once they got past that, there was never a trend in any of this. Just hold on and keep holding on. All right. So I wish you all the best with your trading. Take care.